picking stocks, you need to be very careful about doing the right thing for the wrong reasons. This happens more often than you'd expect. Okay, let's say you find a great company, well-managed, strong fundamentals, good dividend. You buy that company's stock, and that stock goes up. It's only natural to conclude that it's going up for all the reasons you liked about it in the first place. But you see, that's not always true. You might think a win is a win, but it's more complicated than that. If you don't understand why a stock is moving up or down, you're probably going to be very confused when it stops doing that and goes in the opposite direction. And when we're confused, we make really lousy decisions. For example, there are a bunch of excellent, well-run consumer packaged goods companies. Maybe you want to buy some Clorox or some Procter & Gamble. There are lots of logical reasons to like them both. But like I told you earlier, logic is rarely what drives the stock market on a day-to-day or minute-to-minute basis, of course. So suppose you pick up some Clorox because you really believe in CEO Ben O'Doer and his team, or you like the dividend and the growth of the dividend, or you think that plastic and fuel costs are going to go down, which will boost the company's gross margins. You buy the stock and then it explodes higher. What's next? You have to ask yourself why it's rallying. It's very easy to tell yourself, I nailed it. This market is finally giving Clorox the credit it deserves. When you buy a stock and it goes up, that means you were right. Why would you second guess yourself when you're right? Because maybe you were just lucky. As I told you before, it's better to be lucky than good. So when you rack up a nice win in a Clorox or a Procter, you need to ask yourself if you were right or if you simply happened to be in the right place at the right time. Well, what do I mean by the right place, right time? Rotation, rotation, rotation. There are times when the consumer packaged goods stocks roar higher for reasons that have nothing to do with the underlying companies. Clorox and Procter are recession stocks. Because their earnings tend to hold up during a slowing economy, their stocks roar when we get lousy economic data. If you buy these stocks because you believe in the business, but then they go higher as part of a sector rotation, that has nothing to do with the business. Well, you still have a win. The bank isn't going to tell you that you can't take that money because they don't accept profits from rotations. But you don't want to get caught with your pants down because the market suckered you into believing the Clorox was going up based on the fundamentals, when really it was benefiting from rotation of the whole consumer packaged goods sector. This is what I meant earlier about filtering out the signal from the noise. And I know it's really hard to do. Why? Because of confirmation bias. When you have a thesis and new evidence seems to prove your thesis correct, the natural thing is to believe you were right all along. You should approach that feeling with skepticism. Maybe you're right. People are right about stocks every day. But maybe it's just a coincidence and you should ring the darn register before the coincidence goes away. Here's the bottom line. It's very helpful to understand why a stock you like is going up or down. When you have a win, don't lazily assume that simply he got it right. Think about what it means if you were merely in the right place at the right time. And proceed with caution. Stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.